Welcome to Market Outlook, a program put in place to look at the market in its totality, both at the level of fundamental and technical. So before we start to check the chart, I want us to take a brief look at the expected fundamental news released for the week. Okay, because whether we like it or not, it has a part to play in the way the market shape up for the week. And we'll be living in denial if we do not take time to check them out, because they can affect our trades. Of course, they are the stuff that actually control what happens in the technical. All right, so these ones are gone. On Monday, nothing. No, Monday you have something. You have the monetary policy meeting for AUD. Just a story that we've got there to study, to read. But on Tuesday, we're going to have CPI. Okay, CPI for card. Very, very important. You knew how CPI for USD reacted last week. So let's prepare for CPI for card. What is CPI? CPI is Consumer Price Index, and it is a measure of change in inflation for that country. All right, change in CPI data on a percentage basis will give you the idea of whether inflation is up or down. There may not be time for me to give you the formula for calculating CPI, just a change divided by the former value. Okay, previous value minus present value divided by previous value will give you, an index. Okay, and that index will tell you whether inflation is up or down. So we're going to take note of that. Last week, CPI data was released for USD. Let me just give you a clue as to what to expect. Okay, USD on Wednesday, you have the CPI. You can see that CPI was 1.3. We expected a value of 0.2, and then you got 0.00. Okay, so this 0.00 you can see is coming down, and the fact that it's coming down tells you that inflation is relaxed. Okay, it means that the monetary policy measure adopted by the monetary authority in the US, Federal Reserve, is actually yielding results. And I can also tell you that it is not just because the monetary policy is yielding results. It is actually also due to the fact that crude oil price is coming down. Okay, that's number one. And I can also tell you that another factor that play a part in the drop of CPI is just because of the anticipation of possible recession. Okay, United States economy is bracing, and of course, major economy, Eurozone, Australia, they are bracing up for possible recession. And of course, you know what happens when there is recession. Industries will slow down production. Okay, because recession means that consumer is down. Okay, investment is down as a result of increase in interest rate. Investment will drop. Okay, instead of companies, industry to be increasing in capacity, they will be, reducing in capacity. Okay, and then if that happens, what will follow is possibility of decrease in energy consumption. They're going to reduce their energy demand. And reduction in energy demand is actually telling on the price of crude oil right now. You can see price of crude is dropping because there is, a decrease in demand for energy in anticipation for possible recession in the global recession. Do you understand? So these are some factors that are weighing in the reduction of CPI value that you are currently seeing. CPI from US gave us a lead that last week. So we can bring in this analysis to that of other currencies. GBP is going to release their own figure on is it Tuesday or Wednesday? This is a monetary policy meeting for AUD. Of course, we can anticipate what will likely happen but you see of that of card CPI, okay, analyze it, look at the previous, look at what is expected, the forecast and all those things. I've given you a lead. Sorry, guys. I've given you a lead on what you should expect. Then you have official cash rate for New Zealand. It's going to come on Tuesday. Please take note of that. Take note. Official cash rate of New Zealand. We'll check what this would say. If let's check the cash rate, it was 2.5. We're expecting an increase by 50 basis points that will make it back to 3.0. And then if they also increase it, of course, you know what will happen? There will be, increase in value for New Zealand. Then we're looking for bullish move for New Zealand. But all those things don't rattle me again, guys, because all these news release, before they are done, the market will adjust, the technical chart will adjust itself preparatory for that move. So if you know the structure very well, then you know what's going to likely happen. But why I don't trade all these things is because the market seems turn out to be very erratic, as I will show you in the chart of New Zealand, AUD New Zealand. You're also going to expect quality sales. These don't carry much weight. Then FOMC and the employment change, unemployment rate for Australian dollar. Expect it on Wednesday. This is a very, very important news. We have to wait for this if you trade AUD. Okay. Then Thursday, nothing. Friday, nothing. Okay. So important news for this week is GBP CPI. Card CPI. Expect it on Wednesday. Okay. SZD cash rate. Expect it, and AUD unemployment change. These are three most important news you should expect for the week. All right. So I also have this for you. I have this account I trade that just like 2 weeks now, connected it to my FS group for you to see the growth of the account and for you to confirm the system that we trade. There is a foolproof system, is tested and trusted. This is where you can test your trading system. You want to see whether your risk management is top notch. You want to see if your ability to analyze the technical chart correctly is top notch, and you want to see if your fundamental is okay. You can test all this if your account is tracked, connected and tracked, verified and tracked on my FS book. So I have this there. You can see we are up for 12%, close to 13% for just 2 weeks now. So definitely I will be showing you this once in a while. You see, it's going to be this how your chart, your equity curve should be. Your equity curve should reflect that of ELLIOTT wave theory. If you are doing things correctly, nothing goes up forever. You should make an impulse, you should make a correction, you should make an impulse correction, you should be going. But if you are bullish, let your chart show bullish, structure. That's how it is. So here you can see impulse, you can see a correction, you can see it's making another impulse again. That is how it's supposed to be. That's how your progress is supposed to be. You know, if it's just one up move, boom, like that, there's something is wrong. If it's just down move, boom, something is wrong. Is if it's consolidating, moving up, consolidating, moving up is good. But consolidating, moving down is bad. Okay. So I encourage you to make sure that your equity curve is fine and good. All right. So next we'll go to the chart. All right. Of course, we will not have time to be doing top-down analysis here. That I have done. All I just have to give you is what I see about the market and my bias. Okay. So next week or last week rather, we saw a three-wave move here. Although we had expected this to go a bit lower, so I was targeting this demand zone, not really this. Okay, because it is this demand zone that will give me equal leg of this move, correction, and this move. But it was short, and that's not a problem because there's no rule that says that it must be equal leg. Even where we got the idea of equal leg, zigzag equal leg, where we got the idea, okay, the law states clearly that it is usually. That means that it is not compulsory that it must be the same. This leg and this leg, it is usually equal. But when it is not equal, you don't fault the chart that why are you not equal? No. Because the rule says it is usually equal. So after that, you now have a correction. You have a correction here. Can you see the correction cannot break the top more? Again, so you can't fault it. Ordinarily, these corrections will come up, but it cannot. So it is a complete structure, and then you have down. So what are we expecting, guys? All we are expecting is another correction and a move down. So this week, expect DXY, to make a correction, to complete corrective structure here, and one more down move. Okay, that's what we are expecting from DXY. We want another down move. Where are we to target, guys? All we want is this three-wave structure is being corrected, and we want another three-wave structure here. That's all. That's what we are looking for. This will make enough correction for DXY to either continue the bullish rally or to make a bigger corrective structure here and a drop again. That's what we're expecting for DXY. Okay, AUD USD. Okay, in Wednesday live session, I was telling you that we want this pair. This is an ending structure. Okay, and if you look at it right here, you see, I told you that every ending structure you must test with the presence of a divergence. Okay, you can see there's divergence here. Okay, you can see the indicator is making a lower high here, and it's making a higher high here. So there's divergence. That means that three-wave structure is going to come here. So the rule of thumb here, guys, is that if this ending structure is coming at a point where the structure is complete, like here, 1, 2, if it's coming here, what is appearing here, guys, if it is this part of the chart that is appearing, it then means that ending structure with a divergence is going to give us a continuation move to the downside, and not a three-wave structure. But right here, it is appearing at the middle. Okay, it's appearing at the middle. Once this is appearing at the middle here, and then this structure at the middle with a divergence is just going to give you a three-wave pullback and a continuation to the upside. So where the chart messed me up and I was not able to catch this move, I can't deceive you guys. That was why I didn't trade again for after that Wednesday incident. I didn't trade again. Why? Because I was expecting this three-wave structure to come down here. Okay, and I was looking forward to now trade this wave to the upside to catch all this move. Okay, but you see what happened is this. What the chart did was to give us a truncated C. It's a truncated C, A, B, and C. This C is truncated, and a truncated C will usually give you what is called a contracting flat. Okay, these are difficult. It can give you a contracting flat, it can give you a running flat. So in this case, it gives us a running flat. Is this a running flat? Let me check. Let me check so that I will be correct. No, not a running flat. It's actually giving you a regular flat. This is a regular flat, okay? And then it makes a move to the upside. So when this move to the upside came, we actually saw this structure again as another structure again as this making a big structure in B, okay? And we're expecting this move down. I think it's reasonable, guys. So we're expecting this move down as a three-way structure to the downside, and then from here we expect, we expect a buy opportunity to the upside. This was the anticipation, but it was after this move, we now see, oh, this leg is a short C, that this structure is over. You have the move, correction, and boom to the upside. Okay, so that was what the pair did. That is all over now, guys. I'm just telling you how you should be preparing your money at different times for different structure. So what you should expect now is simple. You know, for about 2 months now, I've been telling you that when this pair was here, that it needs to come more for us to be able to sell. This bear is no doubt, but it needs to come up for us to be able to sell. So what should you expect now as we enter a new week? What should you expect? Let me go to 1 hour time frame and tell you what you should expect. If market open and we see a corrective structure down to this level, guys, exactly at this level, guys, corrective structure, three-way structure, then there will be a move to the upside. Don't miss it. There will be a move to the upside. What is it correcting, or what is this move all about? Of course, you see that this has become the move A, which is a diagonal. This is a three-wave structure in wave B. Then you have to make this wave to complete the structure. And by the time you complete this structure, guys, this will have been a complete corrective structure in 3 waves. Look at it here, guys. It's corrective structure in 3 waves. Okay, and then this move you have here, you have to complete here, downside. Okay, you know, the trouble is not averted yet, the trouble is not over. You should still expect some bearish move of some of this pair. Okay, but this is just one scenario. But what of a situation where this pair keep going up, keep going up, keep going up, keep going up until it breaks this structure? So what you should expect is a move down, corrective structure, and a move far down to the downside. Okay, and a move to the downside. These are 2 scenarios that will play out for this pair. Okay, giving you what to expect. That's how it will be. Either of the 2 scenarios will play out. Okay, for euro dollar. For euro dollar, all right. So now, this is what we should expect. Again, there's no right or wrong in this structure. Okay, this is a complete corrective structure. This can go down all the way. But honestly, we do not expect it to go that way. We do not expect it. Let me show you something. In Wednesday, I told you that after this impulse, okay, you have a 3-wave down here, you have a 3 waves up. We were expecting another 3 waves down. Okay, 3 waves up. We were expecting another 3 waves down here to take a buy to the upside. Okay, and then let me just tell you how we analyze it on Wednesday. But what happened after the 3 waves down, the 3 waves up? This was truncated. It didn't go far down again, and news came boom to the upside. Okay, so what are we to check? What you have to check now is that you should know that corrective structure is over here, and this is a running flat. Okay, and then what I want us to do is to take a view of this leg, take it back to this area, and then target possibility of hitting here. Also know that it's not compulsory, but it's a focus. Okay, so if that is the case, then you go to 1 hour time frame to see if you can get the structure right. Okay, so there's possibility of this impulse, okay, this move higher to be corrected by 3 waves, which we are already seeing, 1, 2, and 3. Okay, if you come here, all you are just looking for is break of structure. Internal structure should be broken, guys. Internal structure should be broken, comes back, you trace, then take it back to this level that you have projected before. This is going to be a possible setup for Euro USD. All right, it's a possible setup here. Take it to this level. Of course, you will have seen that DXY is making a structure to the downside. Okay, before you make this projection. Okay, but I can tell you that if euro dollar can get us up to 1.0500, just close your trade, guys, because at that level you should expect a move to the downside. You should expect a move, look for sell setup to the downside. Anything from 1.0500, don't buy it again. Okay, do not buy it again, because this corrective structure is deemed to have completed its move. Okay, don't buy it at this level again. Look for sell opportunity. And of course, this tallies with what I have been telling you for the past 2 weeks, when some guys, were calling for sell of euro dollar from here. I said, no, don't sell. No investor will put money here. We allocate resources here for the sale of euro dollar. No. They're going to want to sell it up here. This is where it makes sense. It doesn't make sense here. Okay, that's euro dollar for you. Next, GJ. Okay, GJ. The structure I'm saying in GJ is that you should wait, guys. Let it break this low. Okay, because I can see a clear sell side liquidity here. See a sell side liquidity here. So, and right here, guys, you can see you have a very good demand level. Okay, and then what I want to anticipate is simple. I want this level to be broken, and then after it is broken, then I want to see a move. Just wait, always wait to see that originating impulse. That originating impulse will give you a clue as to the correctness of the structure that you are anticipating. So if you don't see that originating impulse, just forget it. If you keep going down, it means that your bias to the upside is wrong. But your patience, your patience to see originating impulse develop, will give you an edge in the market. So you wait to see an impulse breaks like this, then let it correct to the medium point, and then this will now confirm that this structure, this move is what will confirm that this structure is correct. Okay, that structure you are seeing in the middle as corrective structure here is correct. You now have a move to the upside. But then, for quite some time I've been saying that this pair is going to stay in the middle for a long time, because right here, this could be what will happen. 1, 2, and 3, then 1, 2, and 3. Then let's check it again. We have A, 1, 2, and 3, W, 1, 2, and 3, X. Then you will still see another 1, 2, and 3, Y, before you move down. GBP, JPY is going to stay in the middle for a long time. Okay, because as long as we do not understand what is happening, you see progress here, everything comes down again. You see Russia-Ukraine crisis on one hand, you see energy crisis on the other, you see inflation, You see interest rate that is being raised, and it's also affecting investment drive in the economy. All these, you know, you are going to achieve progress in one side and cause problem on the other side. So anytime global economic circumstances is playing out, you know, this drama, you are going to have a lot of consolidations of major pair, you know, over a range. I'm just telling you another thing today. That's what normally happens. Okay, now we are making a lot of progress right now in combating inflation. Okay, inflation is going down. But the issue is that what was the policy that was used to drop inflation? Was it not interest rate hike? Yes, major economies had to increase interest rate, even including Eurozone that have kept their interest rate at zero for a very long time. They have had to increase it. So what is the implication of that increase in interest rate on investment? You are making the cost of borrowing fund to be higher. So what happened? Nobody will come and borrow money, you know, for investment. For housing, nobody will come and borrow money, you know, for real estate. So economy in terms of investment will go down. So you are achieving progress in combating inflation, but you are reducing, you are not making progress in terms of increasing investment drive. Can you see? And if there is reduction in investment, what is the implication? Unemployment unemployment rate will start to increase. If we are not careful, in the next 2 or 3 months, we begin to see that, you know, job earnings start to drop. Unemployment benefits will start to what? Request for unemployment claim. All these things will start to go up in few months to come. You begin to see this, except if anything is done to what? To, you know, to drop interest rate. Interest rate needs to come down. It needs to come down. These economies, they need to see, you know, this increase in inflation as an imported one. Is driven by supply gap in energy. They just need to go and correct that. As soon as they correct that, and energy, there's stability in energy market. Once that stability comes to the energy market, then be sure that this inflationary trend will go down. Even without using a monetary policy, it will go down. And once it goes down, they need to drop interest rate again. Once they drop interest rate, they spark the economy again. They inject fresh breath into the economy and things will pick up. So that's just it. So that's what you expect about GBP. Do not sell GBP, JPY right now at this level, because the structure that we are seeing here is a simple structure. I expect this to break down, set aside liquidity, break it down, then come up again. Once it get to around 165 or 166, between 165 and 166, move for sell opportunity to the downside. Okay, it's not going to break. It's not going to, don't be rattled, guys. It's not going to break this level much at this time. So this is a corrective structure. Okay, this is a corrective structure, and I don't expect it to break this impulse. So from there, it will sell opportunity to the downside. Myself, I'm going to try to look forward to buy this. I'm not going to do this sell, it's too small. Okay, but I want to buy this to the upside. Once it gets here, I want to sell it to the downside again. That is GJ. Okay, GA powers. You know, I've been saying this for quite some time now. If you watch the last week market outlook, I told you, I made it clear that this wave is going to come down. That what we're going to see here is simple. We're going to see that this current move will come down. Okay, this has given us up to 68% of this previous move. I say this need to come down. Why does it need to come down? If you are saying a pair should come down, why do you think that pair should come down? What do you see? What do you want to see? Okay, that's what I want to tell you now. Right here, this corrective structure that is operating right at the middle is not good. 1, 2, 3 up, 1, 2, 3 down. Okay. But you see, as this corrective structure is happening, it never broke this equal low. It never broke this equal low. And I've explained something to you in one of my videos. Okay, strategy for trading a correction after a big impulse. When you see a big impulse here, if you see a three-wave structure to the upside, this three-wave structure to the downside must break this low. It is only after it has broken this low that it has taken enough energy, enough liquidity for it to move to the upside to break this top again. If you break this top, that becomes an expanding flat. If you refuse to break this top and probably coming to this level and coming down, it becomes a running flat. Do you understand? But we always love it to break this top so that the fall can be very decisive and very tough at that. Okay? So if you replicate what's happening here, down here, you will see that we have had a three waves up. Then this three wave down, it is now that it is breaking this low. So the idea now is that we're going to get a lot of investors who are not knowledgeable about this business to think that this is going to be a sell to the upside. But you can see clearly that right at this level, you are having equal top. Okay? No peer is going to fall, you know, to the downside very fast and sharp without having to take liquidity from up here. So honestly, I did not participate in this sell, not because I did not know that the sell will come, but I am waiting for the buy. So how are we going to catch the buy? One thing you should take note of: go to daily time frame. You need to see, you know, existence of what? Of volume injection before you confirm the buy. If right here you do not see evidence of volume injection, as will be seen clearly from daily time frame, maybe you are seeing engulfing here or railroad track or something like that, it's an evidence of injection, volume injection into the market. But if you are not seeing something like that, if you are not seeing an engulfing candlestick pattern, and rather you are seeing a bullish move but not engulfing, what is it telling you? It's telling you that this is just a mere corrective structure for one downside. It means that that upside is not ready. Okay, and if something like that happens, then this might be developing what is called an ending structure in the higher time frame. Can you see? Like ending structure, ending structure, ending structure, ending structure. You will definitely have this. As soon as you have this guy, corrective structure and a move up. Okay, and this will be the complete structure for the downside. But if that ending structure does not come, and you rather see a bullish, you know, a bullish move here that engulfs the previous move, fine. Go back to 1 hour time frame. Simple. Just go back to 1 hour time frame. Of course, we are going to see a powerful impulsive move in the 1 hour time frame. Let me do the schematic of your expectation. Maybe you see this, 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 you will see this. Once this comes, when that engulfing comes in the daily time frame, you are going to see a powerful move like this in 1 hour time frame. Just look for the corrective structure down here. Take your trade to the upside. That's what we're doing. That's it. That's what we are looking out for in this pair. Okay, but for now, there's no suggestion for any buy because you look at your indicator, everything is down. Okay, the momentum is clearly to the downside, as you can see from the relative strength index that is below 50. Okay, strength is to the downside. Even the stochastic, right, is at the bottom. So what does that mean? What's the implication of stochastic right at the bottom? It's just telling you that correction is due. Correction is due. That's the meaning. So we begin to see this, you know, we begin to move to the upside. Begin to move to the upside right here, and that's to tell you that correction is due. And if you go to the daily time frame and it gives you engulfing candlestick pattern, of course you are going to see a very sharp impulse here. So that tells you that you are looking for a corrective structure to the upside. Is that okay now? So that is the idea in GBP AUD. Then GBP card. Okay, what we're expecting is simple in GBP card. Right now, correction is due. Most of the GBP PS correction is due. Of course, you can see if you miss this, you have 1, 2, and 3. Then you have a drop. So you can have a correction up to 50 or 61.8 and another drop to complete the structure. Okay, and it can be dropping like that to come and break this low again. Don't be surprised. That's why I would like to take that trade, because it can be dropping like that to come and break the previous low. Okay, but of course, what we've been expecting and what we've been anticipating is for this particular move to happen. Okay, you see this move? Let me show you. You know, in this group, we always mention ending structure. Anytime we see one ending structure, it's very important you identify it. Okay, what makes this an ending structure? If you see a drop down and you are seeing a slowdown, market is slowing down, it's slowing down. Okay, a time will come, it's going to make a move to the upside. And when that upside move comes, let the market correct to 50 or 61.8 or 78% retracement of the previous move before you look for continuation to the upside. Do you see now? Look at this structure. When we get to this place now, I will not tell you what it means. Okay, I'll tell you what it means. Look at the ending structure you see here. You see the ending structure you see here. Look at that same ending structure here. Check divergence. If there is divergence there, you see this one is making a lower low here. Does it make a lower low on the indicator? No, it's making a higher low. Can you see a higher low on the indicator? So that confirms that the momentum to the downside is not there. That you are going to be expecting a move to the upside. Okay, where is that move to the upside that break market structure? The same way I have shown you here. This is a break of market structure. Okay, where is the move? Look at it here. Can you see here? Market structure. Okay. So where is the corrective structure that I've shown you here? That's what is playing out right here. And I've showed you, you have an expanding flat here, or a running flat rather. And then you have a push here, correction, and another push here. Okay. Another push here. That is the corrective structure. Okay, and so to capitalize fully on this corrective structure that is playing out, if why we want to get involved is if this structure is just a mere correction for this one to continue to go to the downside. Why do I say so? Because if you look at higher time frame like weekly, this pair is meant to continue to go down. Let me complete this analysis before I show you. The weekly time frame. Okay, so right here, what I want us to do is to wait to see a pullback just in 1 hour time frame. It's okay. Wait to see a pullback up to this level. Once you see that pullback, clean 3-wave structure, take your trade to the downside. Okay, take your trade to the downside. And why I want us not to just look at this setup as a 3-wave structure is that the possibility is there that this has become the end of the structure, the end of corrective structure. This particular one, guys, this particular one can just be a corrective structure for this one to continue to move to the downside. So if you miss the opportunity, at the top here, by the time you get here, it's no longer making sense for you to get involved. Your trade will be struggling. But getting involved at the top here is just the best in case this is a complete corrective structure here for this to continue to move to the downside. Why do I have that notion? Why do I have that notion, guys? If you check this pair on a weekly time frame, we expect it to continue to fall to the downside. Okay, we want it to continue to fall to the downside. This is a simple corrective structure. Okay, this is not done yet. You see this? What happened here? Corrective structure here. We want this to continue to go downside. it will get to around 32, okay, for this structure to be complete. And then from there, you can look for a trade opportunity to the downside. For now, with the structure we are seeing, that's how it is, except if the structure change, okay? And even at that, even if it's buying here, it's just a corrective structure for more downside. Do you get now? So that's how it is for EBP card, right? GU, 4 hours, it's the same analysis as we saw in the other major. You know, while we were here and some people were trying to sell GBP USD, I told you, no investor anywhere in the world who is playing the game smartly, who is playing it correctly, we sell GBP USD at this level. That instead of them to sell at this level, what they will do is they will allow the sell to complete, and then they will now buy. They will now look for buy opportunity at this level. That's all. Because as far as I'm concerned, if all credible investors will not put their money to sell here, if this is selling, will now take it to be that, you know, some people are just there to try to push this market lower because they have order here. They have order to buy here, down here, okay? And if the market is here, the order is not activated. And let me tell you something, guys. Let me tell you something. Do you know that if banks place their order here to buy GBP USD, they place order here, they want to buy here, and they have placed their order, and the market is here. Do you know that that order that they have placed here constitutes liquidity to the market? Okay, it constitutes liquidity to the market. So now that is why you see that market might just struggle, drop down, catch that order, catch that liquidity. And of course, you know, those that bought here, they put their stop loss here with the aim to buy to the upside, far up to the upside. Okay, but and all their stop loss is here, guys. Stop loss is here for the buy, automatically means a sell. Hear me very well. When you are buying and you put a stop loss, that, oh, you are buying, oh, this is your stop loss. Oh, that stop loss is red in market algorithm as a what? As a sell. So you are part of your order is part of market liquidity. That's what it means. So if this market now drop here, you see that their order is activated and you move. So if I'm seeing a sell-off here, a sell-off here, I know that it's not the genuine one. It's just a sell-off to catch liquidity and for a move to the upside. Okay, so just like this, what I'm telling you right here is part of what I teach in my mentorship class, you know, liquidity. But let's just move on. So what I'm looking forward to seeing is that this pair, I don't want to touch it until I see it break this level. Okay, I want to see this as a possible three-wave structure to the downside. Of course, you have had your three-wave structure to the upside complete. So what I want to do is to see this retrace to fib level. Okay, if you can retrace to this level, fine. From here, I'm going to take it to the upside. From here, take it to the upside. Then what do you see for you to confirm that at this level, you need to take this pair to the upside? I'll show you now. If you see this continue to move down, continue to correct, drop down, correct, drop down, correct, drop down. At this structural level, there's something you should see, and that is a reaction. You should expect to see a reaction. And the reaction will come to break internal structure. This is a break of internal market structure. This is the last resistance, is broken to the upside. Just look for correction and take your pair to the upside to catch this wave. That if you see it this way, and in that case, this will be a complete corrective structure. This will be a confirmed corrective structure for the upside. And for people that trade trend line, it will not be bad for you to have something like this. Do you get? But what of if this does not happen? If it doesn't come down, if it doesn't continue to come down, then I will show you the structure that is playing out right now. If it's giving us structure like this, which is what I pray will happen, drop down, and at this level, it now gives us a break of market structure. If there's internal structure break here, corrective structure, you have a move to the upside. It then means that the structure that is playing out is this simple structure. This is a three-wave structure here, 1, 2, and 3. This will just be the correction, and you have another 1, 2, 3, 4, and 5. Okay, and that will be a zigzag corrective structure in ABC. And by the time it comes here, probably break this top. That is your level to look for a comfortable sell to the downside, right from the top here, guys. Comfortable sell to the downside. Can you see the two scenarios? If this level, if you don't see an internal market structure break here, guys, expect it to break this low. Once you break this low, look for internal market structure break. That confirms your move. If you don't see internal market structure break, you have no move, guys, in the market. Let me show you what I mean by internal market structure break. You see this? You see this move right here to the downside? See this move right here to the downside, guys? See it? This is an ending structure. See it? Ending structure. Go to divergence to prove that it's a valid ending structure. Can you see? A higher low. Can you see? And right here, you see a lower low. That confirms this move to the upside is going to come. Okay? And then let me now show you internal market structure break, because some people might be confused. You see, a move down, a correction, a move down. What happens here, guys? Internal market structure break. So what are you looking for? A correction to 61.8 or 50%. Whether zigzag, whether expanding flag, whether triangle, you need a correction, not just one wave pullback. That's where many of you who do not trade Elliott wave theory, you miss it. If you don't trade Elliott wave theory, you just see one single push to the downside here, you take a buy. No. But if you are a wave analyst, you are seeing it, you are looking forward to see a complete corrective structure, and that has happened here. This is a clear scenario of internal market structure break, and you see a move to the upside, a move to the upside. Do you understand? So these are the things that you use to confirm your structure. You use it to confirm structure. I teach this very effectively in my mentorship class. Okay, this is what you use to confirm structure. You know, if you are going to have variation of structure, you use internal market structure break for that confirmation. All right. So that is it for GBP USD. GBP card, of course, what's happening there is very clear, very clear. That's why it's very important you allow enough data before you take your trade. All right. This is a move down already. Okay. This is a complete corrective structure. You need this push down, but you can see the push down that you see here is not equal to this first leg already. So that tells you that you're going to have a corrective structure here, the corrective structure here, right here, the corrective structure here. You see supply level, supply zone, massive supply from here to the downside again. This is going to happen, guys. This is going to happen. Okay. And if you look at your indicator, you see on 4 hours time frame, can you see the RSI is below 50, is down. That means that this market is bearish at the moment. Okay, it's bearish at the moment. So that's what this pair will come. And we have a CPI report for CAD. We have CPI report for CAD. So the possibility is this, that if you have this market move correctively to this level before news is released for CAD, then that news will push it down. I'm just telling you how to prepare your mind for news. That news will push it down. So if you have a structure here before news release, just make sure you don't risk more than 1% of your account. Take this set. But if before CPI news release, this market already make a complete corrective structure and it's already pushing down. Before news release, if it has already pushed down to this level, this demand level, and news is released, and you have a complete structure here, and news is released at this level, guys, this market will not go further down. It then means that the market has priced in the anticipation of, data release from card. And in that case, from here, you just look for a buy opportunity to the upside. I can tell you a clear example of what I'm telling you. This is how I traded USD card during news release of USD last week. What news was released? I think unemployment change, NFP. I'll tell you what I did, guys. Let's go to 1 hour time frame. What I did was simple. If you look at this structure, this is an ending structure, guys. It's an ending structure. I confirmed this with a divergence. This is a divergence, okay? After this divergence, I knew this upside would come. And then what did I do, guys? I look at this. This is an, of course, this is an ending diagonal. You will see. You see the wave B here. Okay. This is the wave B here. And this is the wave C here. 1, 2, 3, 4, and 5. This is an ending diagonal. And I saw an internal market structure break. That time news has not happened. I saw this break. I saw this correction. So as soon as this correction came, I now risk 1% of my account in anticipation of this, that the news is going to come to carry me, because I saw the structure, the market priced in everything in anticipation for the news. And what happened? I show you the result. When the news came, boom, to the upside, clean 100 and something pips drop, and TP hit, boom, and I closed my trade. But the news has just helped us to complete a structure. It helps us to complete a structure. Later, I now discover that this has become a complete corrective structure for what? For us to go to the upside. And in going to the downside, rather, in moving to the downside, you have an impulse, you have correction, you have impulse. So it's possible that you have a 3-wave structure here and you drop down again. Okay, you drop down again in 3 waves. Okay, so expect that for USD card. Euro AUD. Euro AUD, I'm no longer looking for upside for Euro AUD, because I am saying that it's possible that this corrective structure is just enough. It drop down, correct again, it drop down. So if we see any corrective structure here, guys, we're looking for more downside for Euro AUD. Euro JPY, I told you that Euro JPY might be coming down. I have a setup that this might be coming down. But if Euro USD is still making a move to the upside, there may be some difficulty for Euro JPY to fall just sharply like that. So I'm seeing a situation where we are having this 3-wave structure here for us to move to the upside first before we come down. Why do I have to anticipate that? Because I see that this impulse, this impulse here is not too big. It's not too big. And the ending structure here is not much. This ending structure here that gave us a clue of this drop, because we saw a divergence here. Okay, right here, divergence. Okay, right here, making a higher high. Here is making a lower low. So because we saw a divergence here, we anticipated that this drop would come, and the drop did not come as hard as we have loved it to be. So for that reason, there may be a tendency of us to have this corrective structure, a drop down. And you can even see the drop down is not so fantastic as we expect. So there may be just a 3-wave structure here, and then at demand level here, we catch a wave to the upside. How do you know that a move to the upside is going to come? We are going to see internal break of market structure. Take note of that. Anywhere you are going to take opportunity like this, look for a slow move, internal break of market structure, correction, and then you are going to catch this wave to the upside. So, but just note that even in catching the wave to the upside, if it play out, it might respect this this level. Okay, then from here you look for another sell opportunity to the downside again. That's how you look at the market, and that's what you do, guys. Then USD okay, you can see anytime you are not having correction in the market, it's usually very difficult and tricky to trade. You see, right now you are having a three-way structure. We expect it to fall down. Okay, if you give us a correction here, this drop will come, but when it comes here, be careful. Okay, be careful. Why do I say be careful? Because another three moves to the upside might fall before you maybe fall. Okay, because why do I have to anticipate this this structure? Because I expected that this will still push a little bit upside here. If we push a little bit upside here, then I know I will, from here, this bigger structure will not come. It will push all the way to the downside. But based on the experience, guys, anytime you're having this kind of structure here, that you're having a three-way structure here, and this does not make an equal leg, guys, if it doesn't make an equal leg and push up very well for you to be able to have a reasonable and harder push to the downside. Once it happens like that, just prepare your mind for a complex structure in the middle and then three waves up again to form a WXY. This is actually the psychology behind the formation of WXY structure. Okay, and when this is done, of course, let me label it for you. This will just be a W, this is X, and this is Y. So, but it can still continue to move further. That is why we must catch an entry here. Let the market push it up. Don't think that market will open and begin to flush down. No. Even you are at the right field level, market will first consolidate, move up, and give you a sell setup to the downside at this level. Okay. Then when you are selling the setup, immediately you achieve equal leg of this one, A, B, and C. Take your trade and be careful because you might have another move to the upside. That will now complete the structure for you to have a sell opportunity to the downside. Is that okay now, guys? So that's how you are going to trade USD JPY. First, you are going to look for sell opportunity. And where is the sell opportunity coming from? This leg down to the downside is too bearish to be ignored. Okay, see, this is A, this is 1, 2, 3. Expect 1, 2, 3, and another 1, 2, 3. This is how it happens, guys. Okay, when you're expecting a more push to the upside, expect a WXY structure. Now your W is complete, expect your X to come, and don't be surprised, guys. At times, I don't like to trade this kind of move to the upside in my life account, but if I want to test my, my technical capability, all right, my technical prowess, I wait. If I have a 50% of this three-way structure to the upside, if I have 50% here, I will look for a break of internal market structure, which will give you something like this. At this level, if three-way structure is coming here, you will have a small move. When you have a break, you just go in for a three-way structure to the upside. Close your trade. Look for a psychological level here, maybe at 134.50. Target your trade to close there, and then look for another sell setup to the downside. Okay, another sell setup to the downside. Get in here, boom, to the downside. Okay, when you achieve equal leg here, be careful because this will just be a what? An X structure. Can you see that this three waves to the downside is too sharp? That is the characteristic of a W. Okay, and this will have a sluggish X B wave here. So this will be A, this will be B, and this will be C, and that will be the X. Then you have a fast move here. That will be Y for it to come down to the downside. This makes sense, okay? That's how we forecast this on structure. US 100, I will tell you that there's correlation between indices and Australian dollar. Okay, time will permit next time for me to tell you the correlation between Australian dollar, which is a risk-on asset. It's a risk-on asset anytime Australian dollar is bullish in the market, just know that there is less fear about the market. There is more confidence about the market, and then the market across board will be bullish, and there's stability in global economy. Okay, and then anytime AUD, JPY, or AUD pairs are falling, just know that there is problem. There is problem in the global economy. Okay, there is problem, and in that case, you will see that indices will be falling. But you can see that indices are still bullish. Okay, and if you analyze, if you analyze from daily time frame, you will see clearly that this is a complete corrective structure for the downside. 1, 2, and 3. So this might be a slow start, a slow move. Let's go to 4 hours time frame. That the bullish move we're expecting on indices, this will just be a leading diagonal. And after a leading diagonal, of course, you know that we're expecting AUD USD, AUD JPY to be bearish. Okay, that time that they will be bearish, we are going to have a 3-wave structure here to the downside, and here you can pick it up to the upside again. Of course, you know, indices cannot be falling anyhow. Even when you see that the stock market is stable, indices will not fall anyhow. But you know, for quite some time, it's been challenging even for the capital market, but they are regaining their stability right now. Okay, of course, you know that if inflation rate is increased, if rate is high, okay, investment will go down, and it will even affect this capital market, because capital market, people borrow money from bank to invest in stock. That's what I want you to know. And if the cost of borrowing is high, not much inflow will come to stock. Not much inflow. Instead, people want to sell off their stock and save the money in the bank to earn a bigger interest. That's how it works. And that is the objective of government. And that is why you see that inflation will go down, because there is not much money in circulation. Okay. When you have effectively curtailed money supply, you have reduced it, you will definitely succeed in reducing your inflation. Do you understand? So that is it. For now, we can't be buying this pair again. We are looking for our sell opportunity. Right now, we are looking for our sell opportunity. What do we see? We need to see this stop this bullish rally. Let it break a structure for us. Then we know that any corrective structure are taking it to the downside. Simple. All right. So US oil, I was in the sell. As you all know, I'm still bearish on US oil. Right now, we have a correction in form of zigzag back to 50%. And then after that 50%, what did I see? Go to smaller time frame. Very clear. By next week, I will see we have already achieved a break of internal structure here. Okay, break of internal structure, corrective structure here, move down. That's what we're expecting on USD oil, US oil rather. BTC is supposed to give us some down move. Okay, supposed to give us some down move. Okay, everything is doing here is just plain. Give us an ending structure here. It will give us this wave. Give us this wave at this level. We buy BTC again. But I had to test something the other time. I have to test something. Go to 1 hour time frame. Let me show you what I did. You see this? You see your indicator? This will reset itself to the low, and then the strength of the buy is still there. That means that we are still going to have some buy to the upside. And let me tell you what I did. I'll have to come to, let me just tell you. Sorry, guys. Go to just lower time frame. Lower time frame. I'll show you something. I was just playing with the chart anyway. See this, see this, you see this. See break of internal structure, correction, boom. Can you see? I was just playing with the chart. You know, there are times that you are not just trading for profit, but you are playing with the chart. TP here, and this is a setup. This is a setup. You see it, guys? This is setup. And from here, you expect a move to the downside. You know, when you understand this stuff, there's nothing you cannot do, guys. You look at the market in a clearer way and you take opportunity. You know, I'm going to show you what I've just done. Just a little thing I've showed you here. I will show you the result right now. So once you understand chart analysis, you can take action. You can study it and understand it the best way that it is forming. Right now, if you go to the Telegram, see this. Okay, can you see what I've just showed you just right now? This is it here. Can you see the result here on BTC? So it's the same analysis you use for other pairs. It's the same thing you use for BTC. If it's the same thing you use for stock, look at it here. It's as simple as that, guys. And the risk is so small. It's so small that I just put it here. The risk is here, just a little, because I don't expect it to come down. And look at it upside. And once it gets to this level, I take my trade, because the corrective structure is just a corrective structure of this move. From here, we should have a move to the downside. But how do I know that this upside is going to come? That's what I want to tell you. How do I know? That's why you must work with indicator at times to confirm a move. Can you see? I am at the bottom on the 1 hour time frame, and my RSI is bullish. It's above 50. That's why I knew this upside is going to come. And I took the short opportunity. You know, that's how it is, guys. So I think that's my last point. Okay, good. Last but not the least, good. Okay, good. Whether I would like it or not, gold is going to come down. I told you that the daily pullback in gold, that daily move to the upside in gold is just a pullback. Why do I say it's a pullback, guys? Look at it. You see this? Has it broken this low? No, it has not broken this low. That means that there are a lot of liquidity resting here. And if those liquidities are not taken, this market will not move to the upside. So if that's the case, what I anticipate will happen. Of course, you know, I forecasted this move for you for gold that is going to happen, and it didn't happen. But why we did not take it is because we thought this move is going to come here before this drop, and it never happened. So now what will happen is that we have this corrective structure here, more upside here, and a drop down to break this move. This is what I'm anticipating for gold, because you know it's finding it difficult to drop down, and this move, initial move here, is too bullish for us to take it as a correction. So if that is the case, anytime you have a market playing out a sentiment like that, just as we are seeing in the major now, that is developing an ending structure at the middle. Developing an ending structure at the middle. Look at it. This one too is developing an ending structure at the middle. And the consequence of it is that if this one breaks this structure, it's going to break down a three-wave structure. And from here, you have another move to the upside. This is where you are going to have a three-wave structure that you can now look for sell opportunity to the downside to do what? To come and break those equal low, to take liquidity for the main buy to the upside. So, but by next week, what should you expect? What I think you should expect for gold is simple. This is already an ending structure, but this ending structure is not appearing at the top, it's appearing at the middle. So for that reason, we are going to be allowing gold to come over here. You can make any move you like here. When you see a breakdown, look for the corrective structure, trade this leg. Don't trade the first one if you are not experienced, but trade this second leg to the downside. Then from here, look for buy opportunity again to the upside. Look for buy opportunity. It will definitely slow down. Look for buy opportunity to the upside. Okay, but because and if it doesn't give you buy opportunity, then what it means is that it's just giving you a corrective structure and more downside. It's simple. Is that okay now? So that is the pair I want to look at for the week. That's the pair I want to look at, and I hope it play out the way we have forecasted them to be. And take note of the different news that we'll be expecting in the market. Make sure you don't open too much position. You can see the implication of opening too many positions. Those that open too many positions, they had it so rough, you know, they had it so rough in the week. You understand? So having 1-2 positions with stop loss is actually very good way to trade. All right. Once you are done with that, you do another one. Once you are done with that, you do another one. That's the best way to go about it. Okay, guys. So I'll be uploading the webinar to the YouTube. If you have not subscribed, please just subscribe to the channel. You know, and press notification bell so that you can receive subsequent content from me. All right. So thank you, guys.
Sorry, Nat.
All right.
Hello.
Yeah.
Thank you, sir.
Yeah.
Do you have time for a quick look at CHF JPY, please?
Okay. CHF JPY. All right. CHF JPY. Of course, you know, we have been anticipating this pair to fall. Okay. And right now, at the level it is, we are still looking for our sell setup to the downside. But what I think will happen is that if you can get a sell to this level, just like we're discussing in Euro JPY, you know, Euro JPY and CHF JPY will play the same way. So we will have it to this demand level, and we'll have a more upside, break all this top, and we'll have a downside again. But for now, I want us to focus on the sell. Let's focus on the sell, 4 hours time frame. Okay. So right now, you can see it here, candlestick pattern that matter, appearing at what? At a fib level. Boom. This is a correct zigzag corrective structure. And of course, you know our rule, zigzag corrective structure stop at 78. Okay, from there, you look for a move to the downside. But do you notice something? Why moving to the downside? If there was supply, if there was adequate supply here, why didn't this pair go like this? That is it. If there was adequate supply here, that is why we had this move. But if here was an adequate supply to the downside, why didn't we have this move? We didn't have it. So the market just moved a little and went up again. That's to tell you that there was no supply here. And then the implication of this is that we will have a 3-wave structure here. Okay, I have the buy to the upside, just as I told you in the higher time frame. Have the buy to the upside. When we now break this top, all this top, we now have adequate volume injection for the pair to now give us a powerful move to the downside. That time, making this low. So, but at the immediate, what are we expecting? 1 hour time frame. Sell setup. That's what we're expecting. Sell setup. A short one. It's not going to be a big one. Because right here, you have a big move to the downside. Right here, you have your correction. Right at the fib level. You want this to happen. But now, a note of caution, when market resumes, do not say that you are right at the fib level, so market will start falling from there. No, it doesn't work like that. Market is going to reset itself for the week again. So you can have this corrective structure, you can have up move, okay, then from there, you can have a down move that will come down. Do you understand now? Because why do you always need to anticipate this kind of move? The reason is that at the earlier part of the week, market do not have adequate volume injection in order to move into the intended direction. So pending on the time that this volume will come, market will play. And you now ask yourself, what is the structure that the market will likely take? This is already a three-way structure upside. Supposing we are in Wednesday or Thursday here, this market will flush down because we are already in the middle of liquidity. Is that okay now? But because we are just opening the market on a Monday, you have a three-wave structure here. You could have a three-wave move down here to form an X. Then by Tuesday, Wednesday, you already have this move to form a Y. And that is why you have this move to the downside. Do you get now? If in London session you are already here, just look for internal break of market structure, get in and sell. If it is New York session you are here, look for internal break of market structure, get in lower time frame and sell. You just, this kind of trade, you just be risking like a 10 pips, 10 or maximum 15 pips. And then you are on your way to the downside. And then if you are trading this, make sure when you get to this level, check around 139.50, check your trade, because this will just be a corrective structure for upside. Because we are expecting euro dollar to move more upside. We are expecting euro JPY to probably move more upside before the fall. So you should expect that this could be there could be this move before you see a downside. But what will confirm that move? What do you think will confirm that move? It's simple. Existence of internal market structure break. Here, if you see a slowdown here, market structure break, correction, boom, to the upside. This is your trade. Do you understand? This is your trade. This is what will confirm that you are moving up. But if you don't have this, you are going to have a correction and a move down. Simple. Is that okay now? Another question?
Thank you.
All right. Thank you. All right. So, have a lovely weekend, guys. See you next week in the trading community. Bye.
All right. Thank you, sir. Sir, please, we'll still need the video.
No problem. I will get it across.
Thank you, sir. Yeah,
Thank you.